with firewall technology.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sumera Abdi. Hi, Sumera. Quietly positive now for benchmark indices. We're up about 0.4%, but we've slipped a bit from the top. And this is the weekly options expiry.
Yeah, it is. And in fact, earnings are in full swing. And you'd know, right? You've been covering all of these.
It's all been about IT this week.
It's all been about IT. And in fact, mid-cap IT major Mindtree has also delivered a healthy Q1 with strong revenue growth and a beat on their margins. Deal wins have also come in at record levels at $570 million. Reema, in fact, caught up with Debashis Chatterjee, the MD and CEO, and began by asking him about the key drivers for margin expansion.
The story that we have articulated, which is profitable growth, and that's the story which we have been consistently delivering to. If you look at our margin cannot be just a one-quarter phenomena. It has to be a longer drawn execution discipline, which helps us to protect the margin and sustain the margin. And the focus in the last 4 or 5 quarters have been how do you sustain the margin and still reinvest back into the growth, and that's what we have been doing. At this point of time, I can say that even if the wage hikes kick in, we are very confident of holding the margins, as we said, indicated 20% plus for the full year. I think we are very confident that that's the way it is going to play out.
So that's at the EBITDA level. Your FY23 guidance is EBITDA margins above 20%. What about EBIT margins? Because EBIT margins, ex of the merger costs, are very close to 20%, 19.7%. Since the focus is on profitable growth, can EBIT margins also climb back above 20%?
Well, I think, at this point of time, we only talk about EBITDA, and that's what we have been consistently maintaining. And, there has been some one-time cost for the merger activities which have taken in Q1, which will not be there in Q2. And if everything goes fine, as we indicated on 6th of May, 6 to 9 months is what we have, estimated. So over a period of time, we will anyway operate as a merged entity. But our target is to make sure that the EBITDA remains strong as we go along.
What about retail and CPG? It declined by 8.9% sequentially. In the call, you said that you continue to face ramp downs in one large deal, along with some deferment in spends for clients. Why are clients deferring their spend, and how long do you think that ramp down will continue?
Well, I think, if you look at our commentary in the last quarter, that time itself we called out that there are specific clients where we are expecting some ramp down. And the reason is, not necessarily just the macro, but some of the programs that we are running for our clients. This was a huge transformation program, which automatically, over a period of time, has to ramp down a little. But having said that, in specific clients, we have seen some softness in pockets, and in retail CPG, there are a couple of clients who got impacted in their markets as well as in their supply chain, which kind of changed their plans. And we had to also adapt to their plans. Like they have markets in Russia as well as Ukraine, which got impacted. They were hugely dependent on the supply chain from China. The lockdown in China did not help them. So essentially, those are some of the situations. But at an overall level, if you look at CPG, it has still grown 15.6% year over year. So it is growing. It's not that it has not grown, but yes, this particular quarter there was, and also let's also look at the currency headwind. There was a significant cross currency headwind that also was witnessed, and some of the CPG clients that we are talking about are in UK and Europe. So essentially, that's what it is.
Will this weakness in retail continue in Q2 and Q3?
Well, as I said, I mean, it all depends on the portfolio of clients you have. So we have to just look at the portfolio of clients we have, and looking at the portfolio of clients, within retail and CPG, we saw a couple of clients indicating a bit of a softness. So I think it is more of client-specific softness, and I'm sure the phase in which they are in terms of their transformation, they cannot just stop everything. So it is just a matter of temporary phenomena, and I'm hopeful that as the quarters progress, these will come back. And these are programs that they have undertaken with a long-term transformation view, which they cannot, which they cannot stop. So, and we have always said that our, we have called out that our H1 will be solid, and we are very confident of delivering our profitable growth in H1. And we have been cautiously optimistic, observing in terms of how the H2 plays out, and we will probably get better sense as we move into this quarter.
Why cautiously optimistic about H2? What is it that worries you?
Well, I mean, the macroeconomic, situation, the inflation and all those things, and as I said, I mean, it all depends on the portfolio of clients. So we are very closely in touch with our clients, and nobody has really made significant change in terms of their plans for the full year, and their plans dictate our plans. And as of now, I don't think, barring a few instances where we have seen, which again I will call out very localized to specific clients, I think the overall demand scenario still looks very robust.
You said a few clients got impacted due to their presence in markets like Russia and Ukraine, or some who were dependent on the supply chains in China and the lockdown impacted them. Were there any clients which ramped down or perhaps deferred their spending due to inflation or fears of recession, and they're just taking a bit of a cautious approach?
No, at this point of time, as I said, it's too early to call out. But the specific instance that I talked about is somebody who is a client who are impacted because of the markets in Russia and Ukraine, which is very unfortunate, as well as the supply chain in China. But any other macroeconomic, difficult to call out. And that's what I mean by cautiously optimistic, that observe what's going on and stay close to our clients and see what exactly they are going to do. At this point of time, I would still say the demand, barring the few instances, is pretty robust.
And will retail and CPG softness persist in Q2 based on your visibility?
Well, at this point of time, as I said, it is, it's only barring a few clients, everything else seems to be okay. And, as I said, retail, the whole RCM practice, retail CPG manufacturing has still grown around 16% year over year. So we are still bullish that that we can continue to grow. One quarter cannot be ruled out as cannot be dictating the overall growth trajectory.
Okay, let's move on and talk about your deal wins. The total contract value of deal wins at $570 million is at a record level. Was it an account of bunching up of orders, or is this a sustainable run rate?
Well, I don't think the order book should be considered as a run rate per se in our business. And if you look at the order book that we had same time last year, was around about 504 million. And so this quarter tends to have a little bit of renewals that come from specific clients. So you see a larger order book. But having said that, it's commendable that this is the highest ever order book that we have recorded in the history of the company. And but the good news is that this order book has got some portion of this order book is also kind of annuity, which helps us in terms of giving the predictability to the business as we go along. But the way I look at order book is look at the order book at an overall annual basis, like how does the order book shape up? And from that perspective, I don't think the pattern is going to change the way it has changed. We just look at if the order book is more than the previous year in terms of what is the growth of the order book for a full financial year and full fiscal. I think that's what we will be focusing on.
And you maintain FY23 revenue growth for Mindtree will be industry leading?
Well, that's what is our endeavor. And, there is no reason for us to believe that we cannot do that till the time Mindtree operates as Mindtree. And also, that's one of the reasons why we have talked about the merger, that we are very confident that these two organizations, both having the same vision of profitable growth, we can certainly continue to be industry leading as well going forward.
Just one final question, DC. What was it about the business model of Mindtree which helped in margin expansion for you when the others couldn't? Because all of you all face the same headwinds, like travel costs, visa costs. The tailwinds are common, like the rupee depreciation.
Well, margin is not, it's not a one quarter phenomenon. I think, and I don't want to oversimplify things also, so I don't want to say that it's very easy to manage, but all that you need in terms of margin is a right team and the disciplined execution. And there are only a few levers that you can play around in terms of margin in the IT world, which is common to every organization. So it's all about how you leverage those levers, whether it's utilization, whether it's the right role for the right rate for the right role, or is it the pyramid. So if you look at all these levers, they are going to be the same levers that everybody can use, but it's a matter of how the team can execute in a disciplined fashion. And I think I'm really grateful to the team that has delivered this margin. And I think it is all about a disciplined execution quarter after quarter. And that's what you see. I mean, our margin story has been, we initially wanted to take the margin up to a certain level, and then we wanted to sustain it. And it's equally difficult to take it to a certain level as it is to sustain the margin. So at this point of time, we have been talking about profitable growth. The team is on the job, and that's what gives me the confidence that we can sustain this margin, in a yearly basis as we go along.
But so next year you will be a part, Mindtree and L&T would be combined, L&T Infotech. Just one question, cautiously optimistic about H2. Is it only on account of seasonality, or do you fear macro headwinds, uncertainty will slow and soften demand for you?
Well, I don't think anybody can, talk of the macro unless it really hits us. And I will say the same thing. Macro is one aspect, but it all depends on the clients that I have in my portfolio. So the important thing for me is to stay very close to my clients. And whatever I have told you so far is the views I get. I've been talking to many of my clients, and there are clients who are still very bullish about, they are not changing any of the plans they have laid out for the full year. So that is what I mean by observing, watching the market and watching the clients, and then take your actions based on what you see with respect to your clients.
Well, Mindtree's delivered a very strong performance.